Good evening, everyone. Thank you for joining this masterclass, Banking on Wealth Management in the New Age by TimesPro. Before we begin, I want to say a few words about SWAYAM Plus. SWAYAM Plus is an initiative by the Ministry of Education and IIT Madras. We are an industry and employability focused skilling platform to help learners upskill themselves and become more employable. In this regard, we are hosting a series of masterclasses so learners can hear directly from experts on what is happening in industry. This is a starting point for your transition from academia to industry. Your speaker for today is Ms. TANVI DUBEY, Zonal Program Manager, TimesPro. She is an MBA with 20 years of experience in the banking and financial services sector. During this tenure, she has worked with industry stalwarts like Carvey Stock Broking Limited, Royal Bank of Scotland, Reliance Money, Principal Mutual Funds at senior leadership positions. She is currently working with TimesPro as a trainer for their flagship program, Banking Pro. She has exposure to different verticals of the BFSI industry, which includes customer service, sales, bank assurance, mutual funds, and training and administration. She is also a certified trainer by the British Council, conducting soft skills training for banks and NBFCs. Over to you, Ms. Tanvi.
Thank you so much for this introduction. And I welcome all the participants to this industry expert session, Banking on Wealth Management in the New Age. Before I start the session, I would like to take you through about TimesPro, the organization I have been associated from last 8 years. TimesPro is an initiative of the Times of India Group. It is India's largest and most diversified media conglomerate with an over 180 years old legacy of knowledge, learning, and intellectual capital. Established in 2013, TimesPro caters to the diverse learning needs of learners with career aspirations. TimesPro strives to embody the values of Education 4.0, that is learner-centric, industry-relevant, role-specific, and technology-enabled. Programs that we offer across industries and domains, curated and offered in collaboration with premier national and global education institutions to fulfill the aspirations of millions of professionals by equipping them with the right knowledge and skills. So once again, I welcome you all to this expert session on wealth management. So before we delve deeper into this topic, the first and the foremost, the most important part of it is what is wealth management? So when we talk about wealth management, people generally think that it is something related to investments. Yes, it is related to investments, but there is a broader perspective attached to it, right? So wealth management is a comprehensive financial advisory service, but it's not a simple advice, right? There are multiple strategies, techniques that are aimed to help individuals and non-individuals, that might include organizations, families, to help them grow, protect, and distribute their wealth. So it goes beyond, only investing. It is that there is more to it. We'll get to know about it in the coming slides. There are certain robust approaches that help individuals, families, and businesses to create a correct financial plan and investment management, which is customized and tailored to the specific needs of the individuals, right? So what are the objectives of wealth management? That is one of the questions that comes to our mind. So the primary objective is creation of wealth in a longer run, right? So we also take care of minimizing risk over a period of time. Say, for example, if a person who is in his 20s, means late 20s and early 30s, plans for his or her retirement, which is maybe 20, 25 years down the line. So he or she will definitely need the services of a wealth manager, right? So wealth managers assess diverse investment options. They also check the market trends, economic indicators, and definitely the individual choices and preferences. And accordingly, they develop a plan for them to grow their wealth. So wealth management also help address critical aspects like tax planning, estate planning, which is also called will planning, and retirement strategies. So generally, if we invest, we generally we do not consider the tax aspects of it. And will planning, most of the Indians, they don't even think about what is going to happen and who is going to take over the wealth that they have created for a longer period of time. Even businesses, they do not think that how this entire business proposition is going to be handed over to the next generation. So that is a very important aspects of wealth management. Now, what are the different stages of wealth management, right? So basically, we have 6 stages of wealth management. The first and the foremost, the most important stage is establishing a relationship with the client, because you are dealing with money, and nobody is going to tell you uh, about their money, their assets, their income expenses, until unless they are comfortable with you. They will not disclose their confidential information until unless they have trust on you, right? So this isn't a rapport building exercise, right? So when you meet the customer, you need to establish a relationship, most probably not in the first meeting, or maybe in the coming subsequent meetings. They will start giving you some information. So then starts the second stage, which is gathering the information and the data, right? So you keep, when you talk to the client, uh, you get to know about their age, their income and expenses, how many people in their family are dependent or on them, and who are the people who are working, right? Maybe both husband and wife are working, and there are multiple details that you need to know when you are making a financial plan, right? So what is their risk profile, what is their lifestyle, right? And then the third stage is, when you get this entire data, how you analyze and process it, right? So once you analyze and process the data, you get to know the risk profile of the client, whether he's an aggressive aggressive investor, or a moderate investor, or uh, maybe a very conservative kind of investor. You get to know that, and then you develop a plan, right? A financial plan, and you discuss it with the client, right? The fifth stage, in this stage, the ball is in the court of the customer, right? Now he or she has to implement that plan. And then the sixth stage is monitoring this entire plan, right? So whatever asset allocation, whatever decisions the wealth manager has taken, that has to be implemented first, and then it has to be monitored for or reviewed to check whether the results are in positive side or not. I'll give you an example, an easier way to understand this. Say for example, you go to a doctor, right? You tell them the symptoms, right? So the doctor asks you certain questions to get to know more about your problems, or the disease that you are suffering from. That is the stage of gathering data. Then he analyzes, depending on the symptoms that you have, the doctor analyzes it and then writes a prescription. No, that is developing a plan. Prescription, that these are the combination of medicines that you have to take, and you have to take it twice a day, once in a day, or whatever. And then it is up to the patient to go to the medicine shop, buy those medicines, and even after buying that medicines, if you are not eating it as prescribed, it is not going to help you, right? So implementation of that prescription is up to the patient. And once you implement, the doctor advises you, after 7-10 days, you come back and you get it reviewed whether the course of medication is right, or it has to be changed, right? So this is how the financial doctor is also going to help you do this, right? Now, what are the goals of the wealth management services? The first goal is wealth accumulation. So when you are working, right, in your late 20s and early 30s, early 30s, or maybe till 30, 35 years of age, that is your wealth accumulation stage, right? You've started earning, you have, uh, a longer period of time to work, and the conditions are in your favor, right? You are young, so that is wealth accumulation phase, and you have the tendency to take risk. Your risk taking appetite is more, right? So that stage is wealth accumulation stage, and you can put your money into more aggressive assets like equities and all. Then in your 40s, you start thinking you are in your middle age segment, and you think of, although you think of your wealth growth, but simultaneously you start thinking of protecting and preserving the wealth, right? So you tend to become more moderate in your investments, right? So it will not be very aggressive, it will be 50% into equities and 50% into debt and other instruments. Then come your wealth distribution phase, which is when you do not have any income, and you have now come to a stage wherein you are, towards retirement, and the entire accumulated wealth that you have will be distributed into equal, uh, monthly, or in kind of a pension kind of a thing, right? So every month you need some amount to sustain your expenses and all those things. So you will completely get into a conservative mode of investment, right? So the goal of wealth management services is to take care of these three stages, and to see that a person who has earned over these years, to make sure that the retirement goes well and he gets a regular income after retirement. This is the primary goal of wealth management. So I hope you all are getting it. As we have told you in the starting of this session, that if you have any questions further, you can put it into the chat box, and at the end of the session, I will answer to those questions. So let's get to the next part of this session, that is significance of wealth management in the banking industry. So we'll start with an example, right? So Mahip is an individual who is 38 years old and has some financial goals, right? Retirement goals, daughter's marriage, maybe son's foreign education, a second home, or a bigger car, or maybe a tour around the world, right? He only has a net worth of 1 crore right now and around 50,000 monthly to invest. So considering his goals, you will also check his risk tolerance, whether, what are the different aspects of his life, wife is working or not, what kind of job he is into, whether it is a government job or a private. There are a lot of things that you need to discuss with the client, and then you get to know about the profile of the client, right? And according to the risk tolerance, risk profile of the client, current financial situation, you design a financial plan. You also check that what is the exact amount that the client is looking for in the coming few years, maybe 20 years down the line. What is the exact amount he wants? And then we do a backward calculation, that what is the investment return that we are expecting, that will make the client reach that investment goal, right? So that return has to be brought by, you know investing this amount, this 50,000 rupees that he has, and the 1 crore asset that he has, into a one time investment, and then probably 50,000 in a monthly systematic investment. So what are the different asset classes wherein he can invest and he can get the desired return, right? Once this is done, the amount is put the financial according to the financial plan, and it is reviewed every 2 years, 3 years, 5 years, right? Why? Because the circumstances and situations of the client is also going to change over the period of time. Also, the conditions, economic conditions of the country, as well as the global economic impacts, are also going to change, right? Like recently, at the time of COVID also, you might have seen that what was the situation. Whatever is happening across the globe is impacting each and every country, right? So maybe we had thought that this is how the markets will perform, but because of the financial situations and other aspects, it is affecting the markets and maybe a particular asset class, and then the desired results are not coming. So you have to review it, and then you will have to come to another plan, that where do we need to put these assets in order to get the right returns for the clients. So it is observed that people who take the help of a financial advisor or a financial manager or a wealth manager, they tend to get better returns, better results, and they are able to accumulate more wealth at the end of their goals, as compared to people who do not tend to take these services over a period of time, right? Similar is the example for your medical services also. If you tend to start taking medicines on your own, it takes a longer period of time, or maybe it has more side effects, and you sometimes you do not even know that what exact problem you are facing, right? And maybe after 10 days, 15 days, 30 days, you go to the medical practitioner, and till that time it will be too late to get the prescription. So this is how it happens. Why it is becoming popular, wealth management and these services these days in the banking industry also? Because over the years in India, the high net worth individuals has grown significantly. So, according to a report, India is likely to have around 16 lakh high net worth individuals by 2027, right? So, so to serve these people and their needs, banks are offering wealth management services to cater to their clients. So, basically, wealth management in banking refers to banks' financial services catering to the needs of affluent clients like high net worth individuals, non-resident Indians. Okay, so they basically give special advisory services, and uh, you know they check their financial goals, needs, customize it, and make it specific to their needs. Okay, what are the different trends that we see into this wealth management in banking these days? Is that there is a hybrid approach to wealth management. Now, what is this hybrid approach? Hybrid approach is like there is a certain segment of people who still want that personal touch. They want some human intervention. They want someone to come listen to them, and they trust people rather than trusting the technological advancements. Now there is another segment, basically the younger generation and the youth of the country is more towards artificial intelligence, robo advisors. They want to get their work done through these mediums, right? They do not want any kind of human intervention, right? So this is called a hybrid approach. The banks are having both these options for their clients. Whatever they wish to choose, they can go for it. Okay. Now, the second trend that we are witnessing is emergence of an alternative asset class. Now, what is this alternative asset class? There, see, earlier the traditional asset class is equities, debt, gold as an investment option, real estate as an investment option. But nowadays, you see hedge funds, private equities, right? And uh, uh, investment banking. So new trends are coming up wherein people are trying to invest more. And the third very important trend that is being witnessed is going beyond metros. Earlier, we had a mindset that HNIs basically they are only in the metro cities, which is not the case right now, right? Uh, when I was with the Royal Bank of Scotland, it was only catering to HNIs, and they had their branches only specifically to in the metro cities only, or capital cities, because their niche segment was high net worth individuals. Okay, So, but now this trend is also changing. I have read multiple stories wherein, people are leaving their foreign jobs, they're coming back to their roots, to their native places, they're starting something new over there, giving employment opportunities to their local people. And, and they're doing exceptionally well. A lot of people have started doing farming and then they are doing exceptionally well, right? Their turnover is reaching more than crores, right? So this trend, the new startup trend, has, opened uh, avenues for wealth management in remotest villages and other areas as well. So metros no longer are the special places for HNIs. Now, services offered by wealth management and banks is comprehensive financial planning, which will take care of the entire financial plan, right? So it will include your investments, your insurance, health insurance, will planning, estate planning, retirement planning, everything. Comprehensive means inclusive of each and everything. Risk management is checking your risk profile and then, suggesting you the right investment options. Investment management recommendations means what investment you should go for, what are the different asset classes that you should opt for, and then insurance planning, right? Wherein, you can be insured from different illnesses and natural disasters, uh, demise of the working member. So all these things are taken care of. The different products that are there in the wealth management solution is mutual fund, which is very popular. You don't have to think about anything. You just have to take the right mutual fund and the investment is done. Bonds, which are government bonds and even corporate bonds, they are more into debt instruments. Debt asset class means debt asset class is a conservative asset class. It is less risky. Means towards if you are a conservative investor, you can go for bonds, right? Insurance solutions is, again, insurance is divided into life insurance and general insurance, which covers your health insurance and two-wheeler and uh, uh, four-wheeler insurances and all. And then a very popular part is remittances. This is for non-resident Indians who are living outside the country and they're sending money, right, into India for their loved ones. So these are the different products and solutions of wealth management for the banking customers. Now, there are different strategies that wealth managers adopt when they give their services to the customers. First is asset allocation. I have talked about asset allocation multiple times. I will try to explain it once again over here. There are different asset classes. So I'll tell you about that. One is equity asset class, debt asset class, gold or commodities as an asset class, real estate as an asset class. Okay. So if you have whatever amount you have to invest, if you want diversification, means you should not put all your eggs in one basket, right? When we go on a tour or a travel, our parents tell us that don't keep all your money in one pocket, keep it in different pockets. So even if one money you lose or it is stolen, you still have others with you. So similar thing goes with your investments as well, right? Your money should be diversified. Your investment should be diversified. Even if one investment is not working, or it will, uh, the pros and cons of one investment will be uh, will be adjusted with the other investment. Say, for example, equities. It is a risky asset class, but it is a very lucrative asset class as well, right? You get very good returns, but it is riskier also. Similarly, debt is a conservative asset class. Your money will not go anywhere, but the returns are very low, right? But if you have a combination of both these, say for example, you have 10 lakh rupees, 5 lakh you put into equities and 5 you put into debt. So it will manage and balance it out, right? Something, some risk is there and some risk adjustment is also there. Returns, you are getting good from equities and you are getting moderate returns from the conservative investment. When you combine both, it will average out. So this is called asset allocation. Diversification is the same thing, right? You diversify by putting your money into different asset classes. Okay. Now, tax planning or tax, uh, taking tax aspect when you invest, very few people do that, right? Say, for example, if you are investing into FDs, when you get the proceedings, when your tenure is over, you get the money after deduction of TDS, that is tax deducted at source, right? So you think you are getting 5% on the FD, but you are not calculating the TDS that you are paying, right? So once after paying the TDS, your returns are more, means lesser than 5%, which is being promised, right? So whenever you are investing somewhere, always take care of that tax aspect of that investment and calculate your returns after deduction of tax, right? Then comes retirement planning. Retirement planning is an essential part of wealth management because most of the people, right, nowadays, whether it is the government sector or the private sector, they do not have pensions. So if you do not plan your retirement well in advance, you are going to pay later. It is very important that you accumulate some wealth and then whatever time you have decided for your retirement, 40s, 50s, 60s, you should have enough wealth to support your retirement of you and your spouse, right? Because we don't even think about it. Medical expenses, medical inflation in India is very high. And 20 years, 30 years down the line, when you will be actually retiring, it will be, double, triple, maybe 4 times, 5 times the expense what you are currently having, right? Then comes estate planning. Estate planning again is will planning, that who is going to take care of your wealth after your demise? Who is going to take care of your business after your demise? So this is also an important aspect of wealth management. Risk management, I've already told that you invest as per your risk profile. That risk profiling is done by the wealth manager. Debt management. Most of the people, they do not do this rightly. Your salary comes on the first of the month, and by the 10th, all your salary goes in your EMIs. In this world of consumerism, we don't even think, we keep on scrolling things and everything is available on EMIs. We keep buying a new iPhone, a new fridge, a new TV, everything is available on EMIs. And at the end of it, we tend to overbuy. And we don't even know that how much money is going towards EMIs, right? So debt management is a very important part of your wealth management, right? If you have some money, whether you should invest or you should pay your debts first, that is a very important aspect. Education planning, education inflation in India is also increasing, skyrocketing these days. So over a period of time, again, 20 years, 30 years down the line, when your child is actually planning for higher education and thinking of going abroad, uh, how much money will be required? So planning for the education of your children, you need to have surplus money for that as well. Okay. And then charitable giving. Under Section 80G of Income Tax Act, whatever money you give as charity and trust, it is tax exempt. So a lot of people have, uh, they donate to trusts and they do a lot of charities. So that also needs to be a part of your wealth management plan. Now, what are the advantages of wealth management? If you are properly doing wealth management, it will maintain your current lifestyle, right? Because we do not consider inflation into our, uh, you know, uh, investments that we plan for our future. We don't think that today, if the milk is costing 68 rupees per liter, after 10 years, how much it will cost. So you have to add inflation to each and every product that you are buying today. Whatever expenses you have currently, you have to adjust it to inflation, and then you have to calculate it that after 10 years, 20 years, 30 years, what will exactly it will be, how much expense you will be, how much your monthly expenses will be after adding inflation to it, right? So how will you maintain the same lifestyle? If you are getting 2 liters of milk right now, 10 years down the line, will you be able to buy 2 liters of milk if you are only putting your money into savings account? Savings account gives you only 3% return. You will not be able to get that. So investments should be made into such instruments which are adjusting the inflation, and then you are getting the right returns. Say, for example, if the inflation is 7%, and you are putting your money into FDs, which is giving you 5% return, after TDS, you're getting 4% return. And the inflation is 7%, means the prices of goods and services are rising with the rate of 7%. And you are only getting 4% on your investments. Your money will not be able to buy you products and services after 10 years in the same investment value. So this is how you need to plan your investments in order to, if you want to maintain your current lifestyle in the coming few years. Again, the second pointer is reducing financial stress. Your financial stress is reduced. You don't think of it more often because you think that, yes, it is sorted. Again, if you are maintaining a proper wealth management plan, you will be systematically investing. There will be a discipline in your investment, right? You have some insurance. The bread earner of the family is having a life insurance plan. It is offering a security to the family. Insurance is also a part of wealth management. So if you have done a proper wealth management, it will be covering all your insurance covers, everything. And then, so your family is secure. Your retirement is secured. And you get a flexible investment strategy. Means it is being reviewed every 5 years, 10 years down the line. So what is the future landscape? So Indian economy is growing, and the wealth management domain is also growing, right? So in the recent past, because I have been into this industry from last 18 years, so I have seen it grow, right? So the increase in number of services that were offered when I started, it only had we only had in banking, we only had savings account, current account, PPFs. But later on, mutual fund was added. When then insurance was added, health insurance was added. So I have seen these things, being offered. Okay, so now the banks have become a financial hub. Every financial instrument is available at the banks nowadays, right? So the wealth management in India is evolving, and it is changing quickly, and technological advancement have made it more accessible to people. So generally, if we talk about the wealth management industry in India, it is dominated by financial institutions, insurance companies, and asset management platforms, that is mutual fund companies. But in the recent few years, we have seen new players coming into it. There are digital first startups and independent financial advisors also who are entering into this field. So there are some interesting facts that I will talk about. So the industry has experienced tremendous growth over the last decade. The number of domestic millionaires and billionaires is expected to increase further. And the International Monetary Fund projects that India's GDP will rank third in the world by 2030. That's a good news. Boston Consultancy Group projects that India's financial wealth would reach US dollar 5.5 trillion by 2025, growing at the rate of 10% per year. Wow. So, what are the opportunities for growth in the industry? So, the Indian government's focus on the development of financial infrastructure and improved regulation of the sector, that is one of the propellers of the growth, and digital banking services. Uh, I don't know how many of you know, during COVID, although it was not a very good phase, but a very good phase for India in terms of digital service expansion, because the older generation, which was not ready to accept digital money and digital transfers, they also have started using it, right? So the emergence of financial technology companies, right? Paytm and all that we are already using. So the future looks bright for wealth management industry in India, and there is a favorable support from the regulatory system of India and government of India, which is making this industry more stronger. Now, what is the regulatory aspect of it, and why we think that regulation is important in this industry? Because it involves money, and we have seen a lot of uh, fraudulent practices which are there, and people really do not trust digital services because of these fraudulent things that are taking over the financial industry. That is the reason why regulatory environment, which is very strong in India, right? If this is not propelling the growth, then we cannot think of a better wealth management industry in the coming few years. And thankfully, the RBI, the Securities Exchange Board of India, the IRDA, Insurance Regulatory Development Authority, Pension Regulatory Authority, they all were very strong in India earlier also. And as there is technological advancement, they also they are changing their ways of regulatory you can say regulatory technology. Reg tech it is called. So they are bringing new technology into regulations also, which is making them popular, right? So in recent years, India's regulatory framework has strengthened, creating new investment opportunities. So people, when regulatory standards are strong, people have trust. People have trust into these systems, and then the foreign institutional investors also show their trust, and they bring in more investments, and this is how the industry grows. Okay. Now you can see a lot of artificial intelligence and machine learning. Um, uh, that is what is the focus of the industry, whether it is wealth management, whether it is the banking industry. They are looking for technological advancement into this field. So this entire industry is moving towards automation. So there is increased use of robo advisors. You can see chatbots are there, right? So these are reducing the cost of the wealth management and the banking industry. Um, a lot of private wealth management firms are also there in India, which are increasing in number. And we also tend to see a lot of collaboration between the banking industry and the wealth management firms and financial technology firms over a period of time to more strengthen it and collaborate in order to give better services to the client. Okay, so we all have heard about financial inclusion. We have heard about Jandan Yojana. The government is focusing on, making this financial service accessible to each and every individual of the country and to make it accessible to each means all the remotest areas of the country, right? So we means the entire country and the government of India is embracing sustainability and socially responsible investment. So means investing into those organizations who are more socially responsible, right? So this is a new trend which is developing. It is a newer trend because we are talking about the new age wealth management, right? So this is how it is going to be in the future. And a new demand for personalized advice and enhanced technology solutions is also getting popular, right? Now we have talked about the growing aspects of the wealth management industry, how this industry is going to grow big because the Indian economy is going to grow big, and what are the career prospects into this field, right? What is there for you all, right? So let's look at that. So let's see another fact. It's saying that this wealth management industry is growing rapidly, and the industry revenue is set to double by 2030. And global wealth is expected to climb by 38% over the next 5 years, right? So this is going to create ample of opportunity for wealth managers. Wealth management is a truly unique niche in the financial industry. It is offering generous compensations with lower stress than sectors like banking or trading. So, wealth managers are not that stressed, also, right? Wealth management has an exciting, dynamic, and often misunderstood sector. It was not very popular earlier. Now it is becoming popular. But for the right professionals, wealth management offers nearly unlimited upside potential. Okay. So, what exactly wealth managers do? So they are expert in various financial disciplines, and they work closely with clients to understand their financial goals, risk tolerance, and unique circumstances. And even among financially sophisticated individuals, means like HNIs who are very you can say particular about their investments, where it should go. They should not lose their money. So HNIs, they are very, you can say, sophisticated, and they want people, wealth managers, who can understand their needs and tailor and customize the products as they want, right? So the scale of service can differ. It can be only merely a relationship management kind of a job, or it can be a very research oriented, and the HNIs, they want their wealth managers to be their chief financial officers, CFOs, right? So the wealth managers, they basically can take any financial decisions for their clients, and the clients trust them to that level. So, what they do investment management, they do financial planning, retirement planning, and a good amount of research and due diligence is required for this. Now, what is the career path? You can be a relationship manager, wherein you are only managing the relationships, and you're not doing any kind of back end job. You're not doing any kind of research on investments. You're not giving any kind of advices. For that, there is someone else who's sitting to do that. You can be a specialist who can do all these things. You can design a plan. You can think about what are the different asset allocation strategies and all those things. And you can be a proper administrator who's taking care of the customer service and other aspects of the uh, financial planning and wealth management. So that's all from my side. If you have any questions, we can take it up.
Thank you, Ms. Tanvi. I encourage all the participants to post their questions on the chat. There is already one question, so we can start with that. It's from Sai Srinivas, who asks, you had talked about risk management earlier. So he asks, isn't insurance included in risk management? Please explain the difference if it is not the case.
insurance and risk management, right?
Yes.
Yeah. So, risk management is again a broader term, right? Wherein, we profile the client as per their risk tolerance, right? The client can be an aggressive risk taker, moderate risk taker, or a conservative risk taker. And accordingly, we develop a investment strategy for that. Insurance also comes under risk management because if you are insured properly, whether it is a life insurance that is there, or a health insurance, or other insurances that are there in general insurance, it helps you mitigate your risks in your life, right? So, if you are insured properly, it makes sure that your family, after the demise of the uh, bread earner, can continue with the same lifestyle uh, after the person's demise or death, right? Similarly, if you have a health insurance, your savings will not be depleted. The health insurance will make sure that your expenses are taken care of. So, insurance is also a part of risk management as well as risk profiling and other investments that you have done. For that, managing and mitigating risks also comes under that risk management part. Risk management is also important in business investments, right? Because when you are taking care of the entire business, the risk management of the business is also very important. So, risk management is a broader term. Insurance management is a part of risk management. I hope I have answered your question correctly.
Thank you,
And
Ms. Tanvi. We have a few questions on the chat now. So Deepshika asks, what steps can she take if she wants to pursue a career in wealth management?
wealth management. There are a lot of courses available on wealth management that you can pursue, right? With the right edtech companies also. And these wealth management courses, you may see, I have already told you that wealth management is something wherein you have to develop and build a relationship with the client. So, soft skills are very important when you enter into this field of wealth management, right? So, you have to take a course wherein, uh, the course is helping you develop your uh, personality, right? Because when you are uh, connecting with the HNIs or you are talking to the HNIs, your communication skills, your personality, your confidence levels, they play a very important role. And to when you're going for a job, to take up a job like this, the interviewer is also going to check all these skills in you, right? So you have to take up a course which is more focused towards skill development, right? Rather than only knowing about the uh, domain part of the wealth management, right? So you should definitely search about the courses which help you enter into the banking industry. And banking industry will also give you the start of, this wealth management, relationship management uh, profile that you want to look for in the future.
Thank you, Ms. Tanvi. So we have two questions along the same line. Shweta asks, how is AI going to affect the financial sector, especially in wealth management? And Sai Srinivas asks, what are the future prospects of someone in the AI and ML data domain in terms of job profiles and the kind of work they would be dealing with? So yeah, basically, is there scope for people in this domain and in the wealth management world?
Okay. So, AI and ML are definitely going to take over the wealth management space in the coming few years because, as I told you, that there is one segment which is still looking for people who, human interactions they want, and there is some the newer younger generation, they are more into technological part of it. So if you are doing a course into AI and ML, probably you will be into the backend administrator job, which I just told you. Backend development of applications and technological part of it. If you are into if you are doing any course into artificial intelligence and machine learning, so it will be basically into the backend part of it. If you really want to come into the front end of it, you want to interact and connect, and you want to be at the receiving end of it, then you will have to do a course which is enhancing your personality and all those aspects, because you are directly meeting the clients and taking care of their investments. So that will be the human intervention part. And if you are doing a course on AI and ML, that is going to take you towards the administration part of the wealth management.
Thank you, Ms. Tanvi. We have a question which I think you've sort of answered earlier. It's how can we start our career in wealth management after MCOM with no prior experience? But I think you kind of covered that. There's another question
I would
regarding.
like to answer this once again.
Okay.
If you have done a MCOM or a BCom or any graduate or a postgraduate degree that you have, you don't need to have a specific graduation or post-graduation degree if you want to pursue a career into wealth management. Any bank, you know, uh, most of the banks, they're having this wealth management, banks and financial institutions also, right? You talk about mutual fund companies, you talk about financial institutions or any uh, banks, they have this starting job role of relationship manager, which will take you towards a wealth manager role, right? So wealth management in these institutions uh, is basically managing relationship with the client and uh, giving them an advice on what investments they should take and what kind of insurances they should take. You can start with any of the banks or financial institutions. For that, you do not require any prior degree. You just need to take up any short-term course, right? Which will help you in developing your skills that are required in the banking industry. They require certain skills, right? They require communication skills, they require personality development skills. They want you to be more confident while you are speaking to the customers, and they want some kind of domain knowledge. So you need a course which has a your combination of all these 3-4 aspects that are required, and then you are good to go. So like, if they tell you about how to handle the interviews that you will be having in the banking industry or the financial services, if they prepare you for the interviews, if they are developing your skills, then you can start your career with any of the banks or financial institutions.
Thank you, Ms. Tanvi. We have a question regarding cryptocurrency. So how do you see the advent of cryptocurrency within India as part of future portfolios of wealth management? Is it a trend we could expect?
Yes, it is a part of wealth management because it is getting popular as an alternative investments. I just talked about the different aspects of the new trends that are coming into the wealth management part, that is cryptocurrencies. But still in India, it is not regulated, right? So until and unless an instrument is regulated, the chances of it getting popular is not there, right? So I don't think so it getting very popular in the coming few years until it gets regulated, because only last year in the budget, uh, the only thing that was done, that whatever earnings you get from cryptocurrencies will be you will have to pay taxes on that. But still, if you talk about regulations making it more popular, that is not being considered in India. So I don't think it becoming very popular. But yes, people are investing into it. And uh, as a popular wealth management plan, I don't think it coming into the picture, because it is not a you don't get a consistent returns in cryptocurrencies. Maybe in 1 month you will get 100 times returns, and in another month it will be minus 100 times. So there is a lot of fluctuation uh, in this instrument, and hence it is not very popular amongst the wealth managers also. So it can be like, if you have surplus money, you want to put it there, you want to take that risk, you can do that. But as a proper investment plan, you can't go for cryptocurrencies.
Thank you, Ms. Tanvi. There was another question about blockchain, which you have covered just now. So I'll go to the question regarding from Nikhil, who asks, please tell me once again about estate planning. And is there a difference between estate planning and real estate?
Yes, it is. It's a very good question. Real estate is means investment into land, flat, house, right? So that is real estate. And estate planning is will planning. You must have heard about wills, right? That once after your demise, who is going to take over your wealth, right? Whether it is your spouse, your children, or you want to, sometimes when you're not doing the right thing, your mother tells you, your parents tell you that I'm not going to give you anything from my property, I'll give it to the trust. So this is what estate planning is. You design it, you plan it, and in advance you write it in your will that after your demise, who is going to take care of your entire accumulated wealth. I hope that answers your question.
Thank you, Ms. Tanvi. Um, okay, there are two questions. I think we have about time for just two more. One is how do psychological factors influence your investment decisions, and how can you mitigate these effects?
Definitely, psychological factors influence your investment decisions. Uh, like I'll give you an example that, people they tend to take advice from their family members, friends, and if my parents have been investing into FDs, I tend to invest into FDs, right? Or, if my friend is investing into mutual funds, I will be curious that I should also invest into mutual funds without thinking that whether this investment will be suitable for me or not, whether I should check other aspects of it or not. Just because someone is giving me an advice, someone is telling me to do this, I do that, right? So psychological factors, generally in India specifically, because people are not very aware of the financial awareness is not very common. People take these decisions because others have told them to do that, and I am, being influenced by someone, and I tend, or maybe a insurance advisor comes to you and influences you to take an insurance plan. I'm just taking because of that. I'm not doing my homework. Whether I should take how much insurance, whether the insurance plan that he's giving is suitable for me or not. We do not check on all those things just because someone is influencing, someone is taking. We get carried away by those decisions, and that is not the right way to do it. Okay.
Thank you, Ms. Tanvi. I'll just read out one last question because we're out of time. Um, and so the question is, how is wealth management helpful for the ladies in the family? Is a question from Poonam Kumari.
It is helpful for everyone in the families. Specifically, since you asked about ladies, most of the ladies in India, they are not working, first of all. So they are dependents, right? So if there is a proper wealth management in place, so the bread earner of the family will make sure that, there is a proper insurance cover. If the person is not there to support the family, that this insurance cover is going to help their family maintain the same lifestyle going forward. If there is a proper wealth manager, if suddenly something happens to the male member of the family, the ladies, there will be a person whom they can, consult, and they can get the details. What happens that most of the means the wives, they are not even aware that where their husbands have invested, whether they have invested into some insurance, into some mutual funds, they are not aware of their investments. So if there is a wealth manager, at least there is a second person who is aware of the investments, who knows about all those things, and they can advise after something happens to the bread earner of the family. The first thing is this. The second thing is that if the lady is already working, they should also, I have a proper wealth management in place, right? So it is helping me a lot. So being a working lady, that is helping me build my wealth, grow my wealth. If I'm not working, then I'm aware of, what is happening in the family. Even if I'm not aware, the wealth manager is there to help me out if something happens to the male member of the family. So this is how it is going to help you. I hope uh, I was able to answer your question.
Thank you, Ms. Tanvi. So, with that, I would like to say thank you, Ms. Tanvi. It was a very enlightening session indeed. A big thank you to all participants for attending and actively participating with your questions. I request you to register on SWAYAM Plus and follow us on social media. We're on LinkedIn, Instagram, Facebook, X, and we're also on YouTube, where the recording of this video will be uploaded for your future reference. Thank you all once again, and wish you a very good evening and a happy learning journey with SWAYAM Plus. Thank you.
Thank you so much. Thanks, everyone. Thanks to the participants and for asking relevant questions. Thank you so much once again.